All right, so Judith Piña is the outreach specialist for community relationship and outreach branch of the California Department of Insurance, and we are going to learn all sorts of great information related to insurance, which is a super, pardon the pun, hot topic because all sorts of things related to wildfire and natural disasters and insurance have come up in recent years and keep getting expanded on. And if I can ask everyone who's not muted to mute themselves now so that we get a clean recording that I can then post to our new YouTube account, which will be set up shortly. All right, Judy, the floor is yours.
All right. Hello, everyone. Good evening. As mentioned, my name is Judith Piña. I'm here with my colleague Destiny Flores. She's going to be helping me out with the slides because I normally have a tech cloud over me. So in case anything goes wrong, she can help me out with that. So we are outreach analysts. I am an outreach analyst and cover San Bernardino County and Riverside counties. Destiny focuses more on the Los Angeles area. So for those who don't know, the California Department of Insurance is a state agency. We're a consumer protection agency that regulates insurance marketplace. So we regulate most kinds of insurance, such as homeowners, auto, life, and pet insurance. So just to name a few, CDI, or California Department of Insurance, manages and oversees insurer solvency. So we make sure that insurance companies are financially stable to pay out claims. And so we set standards for licensing agents, brokers, conducting market reviews. So CDI ensures that companies treat consumers fairly and follow the law. And so we also resolve consumer complaints. We take cases and as well as investigate and prosecute insurance fraud. So if you ever suspect fraud or want to report fraud, you do so by reporting that to our department. Next slide, please. Okay, so to start, I want to talk about what we're seeing in the insurance market. When we look at insurance market right now, there are a few key factors driving to what consumers are experiencing. California's last insurance reform was over 30 years ago. The market today looks very different, especially with climate risk and rebuilding costs. We know that what it cost to build a home 30 years ago or even 10 years ago is not what it is today. So we've also seen a significant increase in the cost of rebuilding homes, materials, labor, construction costs have all gone up. And that directly impacts insurance rates. Also, the cost of reinsurance, that's also a factor. So insurance companies also have to buy their own insurance. That's what we call reinsurance. So those costs have increased globally, especially after major disasters, and that gets factored into pricing. Also, growing climate change threats, wildfire, extreme heat, and other climate-related risks are happening more often and with greater intensity, and that increases overall risk in California. And for those reasons, consumers have fewer options. Some insurers have limited or paused writing new policies in higher risk areas. So consumers may have fewer choices when shopping for coverage, right? And let's not forget the FAIR plan. So there's been a major growth in the FAIR plan. And so because of all those limitations, more homeowners are turning to the FAIR plan, which is we refer to as the insurance of last resort, but has been the first and become the only option for many consumers. So we've seen rapid growth in the FAIR plan enrollment over the past few years, and all of those factors together are what's shaping the insurance market that consumers are navigating today. Next slide, please, Destiny. Excuse me. Okay, so I'm going to take a step and put this into context, okay? Data shows us that over the past 10 years, insurance companies have had a harder time in California compared to the rest of the country. And what that means is higher losses and less profits. So this slide here breaks it down for us. So when it comes to direct loss ratio, this means how much insurers are paying out in claims compared to what they collect in premiums. So nationwide, it's about 59.7. And in California, it's about 73.9%. So insurers are paying out much higher share in claims here in California. Then we have direct underwriting profit. So this looks at whether insurers are making or losing money just from their insurance operations. So nationwide, it's about plus 3.6. And in California, it's a negative 13.1. So in California, insurers are actually losing money on other underwriting. And direct profit on insurance transactions. This includes a broader view of profit. So nationwide, it's 4.2, and California is about negative 6.1. Again, showing negative performance in California compared to the rest of the country. And finally, return on net worth. So this reflects overall financial performance. So nationwide, 7%, California, 0.8%. So no significant return, lower return here. So across the board, insurers are facing higher losses and lower returns in California compared to the rest of the country. And that helps explain why we're seeing changes in the market, including fewer options and tighter underwriting. Next slide, please. And so this isn't the first time that California has faced a major challenge. After the 1994 Northridge earthquake, insurers didn't leave California entirely, but many stopped writing new policies because of that financial risk. And that's what led to the creation of the California Earthquake Authority, which still provides our earthquake insurance. But there is a major concern when it comes to that, because only about 10 to 15% of homeowners carry earthquake insurance, despite California being experiencing about 90% of that nation's earthquake. So that creates a major insurance gap. Many putting many Californians in financial risk. If a major earthquake does happen. So high risk, low coverage, and so that's a gap that we don't want repeat like it did with the wildfires. Next slide, please. So fast forward to today, we're seeing similar pressures with wildfire. This is just a few highlights that we saw with the LA fires, the scale of wildfire losses, ongoing issues with smoke damage claims, and the need for stronger consumer protection. This is why wildfire mitigation, fair plan reform, and disaster recovery improvements are all connected. Next slide, please. And just to understand the scale of this, what happens here impacts millions of homeowners and communities. And that's why maintaining a stable, functioning insurance market is so important. California is the fourth largest insurance market in the world and the largest insurance market in the United States. Bringing in about over 300 million in premiums each year. So when we compare globally, California ranks alongside major markets like China or United Kingdom. So when we talk about insurance challenges here, we're really talking about one of the largest and most influential markets in the world. So that's the California's insurance market. Now let's take a look at some key programs and strategies in place that help reduce risk and improve access to insurance. Next slide, please, Destiny. So one, I'm sure you guys are probably familiar with this, is Safer from Wildfires. So Safer from Wildfires requires insurers to offer discounts for wildfire safety actions. This includes defensible space, things like fire-resistant roofs, and ember-resistant vents and double-pane windows. So if you reduce your risk, your premium should reflect that. But insurers also needed better tools to predict future risk, and that's where the SIS, the Sustainable Insurance Strategy, comes in. So Sustainable Insurance Strategy allows insurers to use forward-looking models to evaluate risk, future risk, so that they can plan for future risk, not just rely on past losses like they have in the past. Historical data does not reflect current or future risk. But if insurers use these tools, they must also write more policies in high-risk areas. So the goal is to bring insurers back and increase options for consumers. So we talk about mitigating your home, we talk about replacing a roof, we talk about upgrading your windows. We know that that's not cheap. That doesn't come cheap, especially for folks that live that have fixed incomes, right? So that's where the California State Home Grant Program comes in. It's Assembly Bill 888, And what this program does, it provides grants to low-income homeowners in high fire hazard areas. So the grants help pay for things mentioned: defensible space, replacing a roof, replacing, upgrading your windows, and building defensible space. Okay, so but we talk about preparing for future. We know that that's preparing for a disaster is only part of it. We want to make sure that people can make a full recovery after a disaster also. Next slide, please. So what does that actually look like for a homeowner? Safer from wildfires is really a ground-up approach to reducing wildfire risk. It focuses on 3 levels of protection: your home, the area around your home, and the broader community. So the idea is, if you take steps, you can better protect your home and even qualify for insurance discounts. Level 1 is really about your home, the structure, the dwelling. So things like mentioned, the roof, ember-resistant vents, enclosed eaves, upgraded pane windows, non-combustible materials near the base of your home. These upgrades help prevent embers from getting inside your home and starting a fire. Level 2 is your surrounding. So next level is around your home. So creating a 5-foot ember-resistant zone, replacing wood chips or fencing with non-combustible materials, clearing vegetation debris. If you have a deck, clearing your deck. No sheds or any structures 30 feet away from your home, and just maintaining that defensible space. So this here will stop it's meant to help stop fire before it reaches your home. And finally is a community effort. It's about being safer together as a community. Programs like Fire Risk USA, I think that's what you were mentioning earlier, neighborhood level planning and risk reduction. Because wildfire, it doesn't have a line, right? It doesn't stop at your property line. It's a shared responsibility. So when you combine all 3, your home, your yard, and your community, you're creating a much stronger defense against fire. So some insurers may offer partial discounts for completing certain actions. Of course, the larger discounts may be for completing, more measures. Next slide, please. So one of the main ways that communities can do this is through programs like Firewise USA and fire risk reduction communities. Firewise communities are nationally recognized through the National Fire Protection Association and focus on neighbors working together to reduce wildfire risk. A community can be as small as 8 homes and as large as 2,500 homes. So residents work together, to assess wildfire risk and create an action plan with practical safety improvements over time. And this is an ongoing community effort focused on preparedness, education, and long-term wildfire safety. So that's what homeowners can do to protect themselves. So next slide, please. Now shifting back to insurance side, or still building on that. This brings us, as mentioned earlier, sustainable insurance strategy. One key goal that we're looking into is we want to expand coverage, right? Insurance companies are using the sustainable strategy that we just mentioned. Insurance companies are expected to write more policies in higher risk areas. This is expected to affect more than 1.5 million homeowners, including those in wildfire distress areas and folks on the FAIR plan. Another piece is modernizing how risk is evaluated. This includes the use of catastrophe modeling and factoring in reinsurance and climate risk into rate making. And finally, there are incentives for mitigation where homeowners who take these steps to reduce wildfire risk can be rewarded with better rates and improved access to coverage. So the sustainable insurance strategy is designed to stabilize the market and expand coverage. And we are starting to, under these regulations, we are starting to see movement. Destiny, next slide, please. Sorry. So one of the goals, again, of the sustainable insurance strategy is to stabilize California's insurance market and expand coverage options, especially for those who live in wildfire-prone communities. And as part of these reforms, 6 insurance companies have already committed to growing in California and writing more new policies with more insurers. We expect more insurers to follow. So this is important because many many homeowners have experienced fewer options, non-renewals, or have have had to turn to the fair plan. So companies under the sustainable insurance strategy who have committed, filed, and been approved and committed to writing at least more policies in high risk areas are these listed, which is CSAA, AAA is under CSAA, USAA, California Casualty, Mercury, Pacific Specialty, Farmers. So these are the companies that have committed to writing policies in high fire risk areas. So this is a step forward. It's not an overnight fix, but we're getting there. Next slide, please. But insurance market changes aren't enough. We've learned a lot from wildfire recovery, from hearing feedback from wildfire survivors, and our investigations into insurance claims. Our goal is simple. We want people to make a full recovery after a disaster, not a partial one. And because of all of the challenges, the commissioner has sponsored legislation that has been introduced and is currently going through the legislative process. And this is designed to improve disaster recovery, closing the insurance coverage gaps, and reform of the FAIR Plan and FAIR Plan accountability. Next slide, please. There's a flying here, sorry. So one bill is Assembly Bill 1795. So AB 1795 addresses one of the biggest complaint areas, which is smoke damage. Smoke damage claims are complicated because historically there haven't been clear public health standards when it comes to smoke damage. Say for when there's an earthquake, right? So an inspector goes to your home, inspects your home, and deems or decides if your home is safe to live in or take your family back to. Well, that does not exist for when it comes to smoke damage. Next slide, please. So this bill would create a science-based standards and establishes clear guidelines for testing and restoration. So smoke damage is an insurance issue, but it can also be a public health crisis. So, okay, so next slide, please. And so we also think that homeowners, anyone should not have to worry or argue whether their home is safe to live in. And so here's another important bill focused on wildfire recovery is the Senate Bill 876, introduced by Senator Steve Padilla. And what Senate Bill 876 focuses on speeding up recovery for homeowners and renters. It strengthens consumer protections and also addresses delays in claim payments. Next slide. So as Senate Bill 876 also requires insurers to have a disaster recovery plan. It increases penalties for unfair claim practices and improves accountability. This would also require regular claim status updates when adjusters change to the consumer so that the consumer is not left in the dark. And also expands living expense coverage to help families displaced after disaster, but whatever is in the consumer's policy. It also requires updated replacement cost estimates and building code upgrades coverage on policy so that it would cover building to current codes, and also help reduce underinsurance issues and supports faster recovery after a disaster. So many homes with these recent fires, so many homeowners were underinsured and did not know that they were underinsured after the fact. So we don't want that to happen again. So these reforms are focused on improving the claims and recovery process after a disaster, a wildfire disaster. The goal is to reduce delays, improve communication, strengthen consumer protections, and help families rebuild to current safety standards without unexpected coverage. Next slide, please. So this is another bill aimed to improve California's insurance system. It's AB 1680, also known as the FAIR Act. Because there's been a major growth in the FAIR Plan, there is a need for stronger oversight on the FAIR Plan. and modernization, meaning better protection for the consumer. So this bill will focus on strengthened oversight and accountability where they have to report. This includes requirements to follow commissioner recommendations and also requires operational improvements to handle the claims that they have. Next slide, please. This also expands coverage options and allows penalties for violations. This helps reduce the need for multiple policies. Okay, so the goal is we don't want to grow the FAIR Plan. We want to stabilize the FAIR Plan and transition people back into the regular insurance market. We want to depopulate we want to depopulate the FAIR Plan. Next slide, please. So those are legislation that the commissioner is sponsoring. They're going through the legislative process right now. We know that things can change. They could be modified, things can be added, taken away, going through the legislative process, so we can keep you updated on that. But along with that, along with supporting legislative and insurance reforms, the California Department of Insurance also works directly with communities across the state to provide education, just like we're doing and consumer assistance. As you can see here, we've done 918 community interactions with a total of 43,151. We do in-person, virtual, we do workshops and meetings. Next slide. So these outreach efforts happen in many ways, depending on the needs or what the request is from the community. We also tailor our presentations to whatever our audience is. We attend networking events, we do presentations, and we also attend fairs, so resource fairs. We also provide resources at resource fairs. Next slide, please. And so through these outreach efforts, we hear directly from consumers about insurance issues that are impacting their community. And this pie shows us here, this beautiful, colorful pie shows us what we hear, issues that we hear from from communities that we serve. So, people reach out to us regarding wildfire recovery, seniors. We work a lot with seniors and CLCA, which is the California Low Cost Auto Insurance. So next slide, please. And this here doesn't involve wildfire, but I like to share so that folks can share with people that they know or communities that they work with. It's called the California Low Cost Auto Insurance Program. It's also known as CLCA, and this program was created to help eligible Californians get affordable auto insurance coverage. So it's just liability insurance, just what the state requires. And to qualify, you must, meet a certain income requirement, have a valid California driver's license. Your vehicle has to be worth $25,000 or less, and of course, a clean driving record over the past 3 years. So this is a really great resource for people who may have gone uninsured because coverage, becomes expensive. And, we all know that having insurance is important. It protects us financially if we're ever involved in an accident. It protects us, and it also protects others on the roads. So for the low cost auto insurance, you could have applications online, or you can do so by calling the number. I know some insurance agents also sell this, the California Low Cost Auto Insurance. Yeah, just thought I'd share that. So I snuck that in there. Next slide, please. Another resource that I want to mention is our statewide education webinar series. We host these webinars. It's a bi-monthly webinar on different insurance topics that impact Californians. Our next webinar will be on August, and that one will focus on health insurance. Oh, no, sorry. Let me take that back. Our next will be in June 17th, and that will focus on residential insurance. So these webinars are free to join. And so when you register, you also can submit questions that will be answered during the presentation. You'll have specialists answer on that topics, answer your questions. So if you're interested in learning or just staying informed, I definitely encourage you to join us. Next slide, please. And another easy way to stay informed is by signing up to receive our consumer alerts. If you scan this QR code here, you will receive updates from our department on any of the legislation that I mentioned, on any new regulations, any insurance related topic. So I would definitely encourage everyone to sign up, stay connected. Um, next step, I'm sorry, next step. Next slide, please. And so lastly, we like hearing from your community. If you scan this QR code here, it lets you share feedback about today's presentation, something that I might have missed, or anything on you can just share by scanning this QR code. So if you have questions later on, or run into insurance related issues that weren't answered or addressed today, please feel free to reach out to our department. I always tell folks, as big, as small or important question that you might have, or anything that you want to report, please report it to us. If people aren't reporting or calling with questions, we don't know that it's happening. So you can contact us, going through insurance.ca.gov if you're not comfortable. If you prefer speaking to someone personally on the phone, you can call our hotline. It's our 1-800 number, 927-4357. We do answer. I've called many times. So, and if not, Melanie, you have my contact information. You can reach me directly. So just thank you. Thank you for having us today. We appreciate your time. And I'm happy to answer any questions if you have any.
Thank you so much, Judy. That covered a lot of diverse topics, so I appreciate that. I know I had one question, so I'll maybe kick it off, but if other folks have questions, you can raise your hand or drop your question in the chat and I'll read it for you. My specific question kind of stems from what we saw with the Palisades and Altadena fires and some of the insurance practices there. And I was curious, this double the fines on unfair claim practices, like what is a fine? And so is doubling it actually truly a penalty for the insurance company, or is it just like cost of doing business?
No, it would be a penalty for the insurance company. Actually, we have, I think, something. The department has. I don't want to say a lawsuit with a fair plan for I don't want to say faulty for denying small claims. So that's happening right. Yeah. So yes, it's a penalty for the insurance company. Yeah.
All right, thanks, Bob.
Well, I was wondering about Yorba Linda. What statistics do you have about what percent or how many of Yorba Linda homes are on Fair Plan because they could not get otherwise coverage? And how does that vary by different parts of the city?
You know what? I don't have that information, but I can certainly get that information. I know that we have seen um, less people getting the fair plan recently. I know we're seeing less of that, but I don't have statistics for the fair plan. But I'm glad to see if I can get that and get that to you. So
Can you estimate it statewide or
I don't. So
or
you
for
want
Orange County?
for Orange? No, but I can. So you want for Orange County and Yorba Linda?
Yeah.
I can see if I can get that information, and I can send it to Melanie, or we'll hop on your next meeting just to provide the update.
Awesome. Any other questions come up?
Yeah, Judy, thank you. That was really informative. I do have a question regarding the extent of the legislation you mentioned for the smoke damage, since we learned so much from the Altadena fires, etc. Do you know if that legislation extends to other forms of environmental hazard? Like one of the things I read about was the lithium battery explosions, right? And causing a lot of toxicity in soils and other things due to our electrification, which we think, is a good thing. Or a lot of people think it's a good thing, obviously, because we're reducing fossil fuel usage and all that. But do you know if that legislation extends to other forms of chemical contamination? And if not, I'd love to. I couldn't catch which senator actually sponsored that, because I'd love to write to them to make sure that we're considering this for California's future because of the fact that we're also pushing for electrification, not just of vehicles, but of our home energy and stuff.
So it is would it cover batteries? So anything related to smoke damage under a natural disaster, it would cover. And the I'm sorry, the assembly member carrying that is Assembly Member Mike Gibson.
Great. I'll ask him or them because I think that that's a
That's
good future one to consider before, it becomes extensive. So Gibson, thank
yeah.
you.
Yeah, and a lot of legislation comes from community input. So yeah.
Bob, before you go again, let me just jump in. Prem had a question in the chat here about the zones around the house and the upcoming legislation. It says all our patios attached to the house are wood. Are we going to be required to demolish those due to the proposed legislation?
I have that issue too. I have a wood fence connected to my home. Yeah. So that part is what we call zone 0.
Mhm.
And so right now, let me see. So let me think back. So right now, California, initially it was said yes, right? It was said we're gonna have to remove all that. But then that grant that I just mentioned would help with things like that also. So that's not in play yet. But so zone 0 is still in the process, and the Board of Forestry is completing those regulations. So I would say to stay tuned to hear what that means. Yeah.
Great, thanks. Bob, go for it.
Yeah, while we're talking about wood connected to the house, we re-roofed a year and a half ago, but we've got a balcony that's rotten. All the 56 Brock homes in our neighborhood are all 40 years old, and I imagine a lot of other people have this problem too. Our neighbor 2 doors away replaced their balcony with powder coated aluminum, and they said they could not make the deck out of Trex because it was only Class B, and they had to use either PVC or Ipe wood. They chose Ipe wood. So yeah, we're looking at this right now, and we've got one estimate in the ballpark of $45,000 to replace our balcony. But yeah, the main thing that burned down the house across the street, they had the same model that we did, and the fire started on their balcony. Um, and so I'm surprised more people haven't replaced them yet, but hopefully, I guess they're just hoping it doesn't happen again.
That's
Um,
a pretty penny there.
so
Yeah.
so yeah,
Yeah.
and yeah, we've only barely started talking to the city about what's required, what's recommended. It has to go through OCFA apparently, uh, with whatever we replace the wood balcony with.
To follow up with that, Eric, are you still on the line? Yes. Any comments on what Bob just said?
I can speak to that briefly. I know the Board of Forestry talking about AB 3074. They're drafting up the final language, and it's going to be a couple phases. First phase is going to be the 3-year phase, which is going to talk about there's going to be a leniency of first 3 years, and that talks more about vegetation. And phase 2, what Bob was referring to, is the 5-year plan. We're still waiting for final language, but it speaks to having local jurisdictions will assign a timeline. But in regards to building modifications such as the deck that Bob was speaking about, we would only require from OCFA site plan review typically if it's considered a new build. So any remodeling, additions that's done, square foot added to a building, typically that is done through the city building department. Does that answer your question, Bob?
Yeah, I think we'll probably talk to you at some point. Um, but yeah, um, Yeah, I thought you could just replace the same wood with Trex, but apparently Trex is cannot be used for structural supports, and it's not sufficiently fire resistant.
Yeah, I'm not aware about specifics about that. That would be a something a licensed contractor would have to have talks with the building department, and that's beyond my scope of expertise right there.
All right. Bob, any other follow-up questions there?
I had one. I'm still trying to remember it.
All right, I'll ask a question of Judy in the meantime. I'm curious in your role, because it feels like the Department of Insurance is broken into, I'll call them divisions or geographies or regions. Are you like, is there a certain person or group that works directly with the city of Yorba Linda? Like, how are those interagency relationships with local jurisdictions, or do they not exist?
So, for us, I'm an outreach analyst. I work just to provide education and provide updates. And I am assigned. I do work in your area, but if there is um anything that cannot answer, or like exactly what you just asked right now, I can certainly find out for you and make that connection.
Hmm,
Right.
great.
Yeah.
All right, Bob, did you remember your question?
Um, well, one of them was so if we harden our house, we can get discounts on our homeowners insurance. Um, how is there a standard of how much discount you get, or is that up to the insurance company, or does it depend upon how
That
much hardening you do?
So it does depend on how much hardening you do, but it is also up to the insurance company that you're working that your insurer. But by law, they are, if you do harden your home, take certain steps, are required to give you a discount. Now, I've heard different numbers from different folks. But if you're not getting those discounts and you've taken certain steps, you can contact our department.
All right, Diane?
I don't really have a question. I have a comment that is related to what you were just talking about. I think there are a lot of us who would not even want to tell the insurance company anything we've done to our house. We're scared that they're going to drop us because we live in a high fire hazard severity zone. So even though we've got this brand new roof and all of the requirements of for fire and insulation and all of that were done when we re-roofed, and then we'll redo the balcony as well. I don't see us telling our insurance company, and that's kind of a problem, I think. I don't know if you deal with that, but that's how a lot of our neighbors feel about just not telling.
Ooh,
Oops, you got muted, Diane.
We don't even want them out here looking at our home. That's okay. So anyway,
No, we've heard that from folks. I mean, I don't hear that from folks recently, but maybe I want to say a year ago, yes, I would hear that they don't want to report anything, right? For the fear of being dropped. That shouldn't happen, right? That shouldn't happen if you feel that is, and I understand, right? But if that happens or anybody, and you fear that this is happening, say you report something and you receive a non-renewal notice or anything in that form, I would encourage you to contact our department.
All right. Any other questions that have popped up for folks? Looks like Prem has added that I agree, water leaks or other issues, no one wants to report a claim. Amen. Yep.
We're slowly stabilizing the insurance market. Those companies that I did mention are insurers that committed to writing those policies under the new regulations with expecting them to write in high fire risk areas, and they are vetted through our department. They're financially stable to cover their claims, so that should not happen.
All right. Bob?
Consumer Reports does a good job of rating companies nationwide, all kinds of things, or automobiles, washing machines, and insurance. Is there any organization, state or private, that rates the quality of service provided by California homeowner insurance companies?
We do not. I can't say that. But if, say, for instance, someone's selling you insurance, you want to check into it, look into it, see if there's any claims filed against any fraud filed against this company, insurance company and broker. Say, for instance, a broker's coming to you selling you insurance. You want to make sure, or just vet them, make sure there's not any complaints, any fraud filed against them. You can look up that information on our website. But we don't, or that I know of, we don't rate. We can't rate.
Yeah, some organization ought to be doing that
I'm
to
sure.
help the consumers choose.
Maybe we can Google that. I don't know about it, but I can't. I don't know.
Yeah, it's
I
like
thought-
restaurant ratings,
Yeah.
right? A plus, B minus.
Maybe Yelp does. No, I don't know.
I thought of the question I had a long time ago.
Okay.
So we lived here for both the 2008 and 2020 fires, and like 110 homes burned down in Yorba Linda. I didn't hear anything about smoke damage, but in reading the newspapers about both Altadena and Pacific Palisades, people are talking about smoke damage all the time. I think people here in Yorba Linda just kept their doors closed, and I didn't hear anybody filing claims for smoke damage. Any idea what's going on, why it's different for these two fires than it was for the big 2008 fire?
I do not, but I know that smoke claims were a big issue in these recent fires, and a lot of smoke claims were, falsely denied when so that's that's why we're addressing smoke damage claims.
Yeah, maybe it has to do with all those batteries, both in the cars and in the homes, because it's California residential solar doesn't make sense now unless you have your own residential battery to power your house in the evening. And so more and more homes are going to have these residential batteries. Maybe the OCFA guy can comment on that. Has the presence of all these batteries on houses affected the way firefighting is done in Orange County?
It has. We have a couple of engineers that work for us, and they're placing a big effort on it's a fast evolving new technology with lithium ion batteries. Certain instances where the lithium ion batteries become unstable, they go into thermal runaway. Basically, they're extremely difficult to extinguish. There's lithium ion battery storage facilities like battery plants that are starting to pop up. It's a constant threat for firefighters. The biggest aspect is normal fires, you could just extinguish right off the bat and it's out. These lithium ion batteries, they will produce flame, and you have to put copious amounts of water on it for hours upon hours to extinguish it. There's been
and it seems like you ought to use something other than water. I'm a former chemistry teacher, and one of my students' favorite demos was when I would drop a chunk of metallic sodium into water. It skitters around on the top. The hydrogen produces catch on fires, and sometimes the whole damn thing pops and spatters molten sodium. Lithium is right above sodium in the periodic table, and so I can remember, gosh, it's been a while, like 8 or 10 years ago. There was a shipping dock in China with a lot of these batteries, and it caught fire, and it was just they couldn't put it out because if you put water on lithium, it catches fire, depending upon whether it's pure lithium and
It
so on.
it does, and it's a newer evolving technology now. And with all the gadgets we're buying now, it's not only in cars now, but there's batteries all over the place. And the type of gases that it's producing, off gases, the smoke, it's very toxic. So I know there's a lot of research going on, not only through OCFA, but other entities right now trying to develop more successful better ways to extinguish these type of fires.
Yeah, it sounds like you need CO2 gas um or some other chemical like they use for fighting forest fires, that check stuff. Um, if there is a significant amount of lithium in a place
Potentially,
you're
and
trying
they
to put out a
the
fire.
engines carry a variety of different types of extinguishers that have different kinds of extinguishing agents in them, but it's a fast growing technology. So we are placing an effort on trying to learn how to better extinguish these fires.
Have you talked to the people in LA County who recently dealt with all those household batteries on the walls of their garages and the cars that ignited?
I'm not aware, but of that personally, but I would imagine so. That all the fire departments around, we all talk to each other, but whenever there's large scale incidents, as you know, there's resources from other agencies from all up and down the state that come. So I don't know anything specific in regards to that.
That's a good thing it would be a good thing to learn about, I think.
Yep.
Mhm. Yeah, making note.
All right, I'm seeing Prem is now saying in the 2008 fire here in Hidden Hills, the smoke smell was terrible for weeks, but we didn't know it was a claimable issue. That's interesting. Now we put the blue tape on all the doors when there is a fire, which helps. All right, pro tip from Prem. Thanks so much. Any other questions? Bob, your hand's still raised.
Sorry.
You good? Okay.
I thought of another question for Judy. So I was really intrigued by our state's desire to depopulate the FAIR Plan, which I think is a good strategy. One question I had though was that as the depopulation occurs and people are brought back into the regular market, do the insurance companies believe that that's just shifting the burden back on them? And I guess what's in it for them was the question I was curious about.
What's in it for the insurance companies? So,
Yes, especially for high risk areas and, the underwriting with climate change. I mean, if it's not profitable,
it,
it seems
it
like it'd be very difficult. And then, typically fair plan houses are the last resort, not just for the consumer, but they're really just sort of the last resort in terms of payout, and the liability is high. And, I've heard that fair plans in general, like if you look at what happened in Florida, their equivalent of a fair plan really is very exposed and at a high risk of not being able to pay out.
so insurance companies are a business. They do most of their business in California. And with them now being able to use catastrophe modeling, which California was the only state that did not allow insurers to use catastrophe modeling that will help them predict future and prepare for a future. And I'm not sure if folks are aware, but the FAIR Plan is actually managed by all insurance carriers. So all insurance carriers pay into the FAIR Plan. Yeah. So, and
So
the FAIR
it's,
Plan only covers smoke damage. Then folks are required to get the wraparound insurance. So you still have to get insurance for other things by an insurer.
I see. So in some ways it's de-risking themselves. Is that what you're saying?
Yeah. So the FAIR Plan
Okay.
is run and managed by insurance, all the insurance companies. So they all pay into their FAIR Plan. Whatever their market share is, they pay into the FAIR
I've seen another comment here from Prem. Bob Meissen, so I don't know if I'm saying that correctly, is a professional forensic material failure analyst. That is
Plan.
quite a title. Fires are one of his credential areas. He investigates item fires often if you want to ask him about that area. Interesting.
Yeah, never.
Yep.
Yeah, interesting. Well, maybe I can get that contact.
I think she means lithium fires.
Mm-hmm. All right. I'm not
Okay.
seeing any other questions pop up. I want to thank everyone for being here, but I certainly want to thank Judy for participating in this evening's presentation. Our next meeting is on June 4th. So again, first Thursday of the month, same Zoom link. What is that? Same Bat Cave, what is that? What's that Batman slogan?
Mhm.
Still 7 o'clock, and our next presentation is actually going to be Raina Lynn from the Irvine Ranch Conservancy, and they have a really solid fire watch program. And so we're going to learn about how folks can volunteer, get trained, understand that that might be something we could offer in Yorba Linda. So I will also thank those that I'm not going to call it voluntold, but volunteered to be officers this evening. I really appreciate y'all stepping forward. So know that I will be in touch once I get some paperwork established, and we'll probably need some signatures on things. And Diane, at some point, will head to the bank, but it's probably no time soon because we have to file things with the federal government first. So thank you, everyone. And Judy, thank you for your time. And is it Destiny? Did I say that correctly?
Yeah, I know, right? I have to tell my phone call Destiny because it's spelled with a DY. So it's Destiny. I think she jumped. I think she jumped off.
Okay.
But I'm not sure, but I think she did. But no problem. Thank you for having me. I hope I was able to provide helpful information. If you have any questions, you can.
Great. Maybe what I'll do is put your email in the minutes, and then folks have that as access.
Okay.
Great. Thanks,
All right.
everyone. Take
Thank you.
care. Bye.